Recording again. And there we go. So thank you very much for coming along. It's lovely to see everybody here this afternoon. As you just heard, this session is being recorded, but as I said before, it will only record me. It won't record anyone else. So like I said, thank you very much to everyone for coming along. The session this afternoon is on student finance. We are just going to be focusing on student finance. I'm going to talk a little bit about the application process, about the different kind of loans that your children can apply for, and a bit about some other processes around other money that you might be entitled to. And I'm going to show you a few different things and talk through those. Now, if you would like to ask any questions, there is a function at the bottom of your screen. If you hover your cursor over the bottom of your screen, there is a little box that says Q&A. If you can type any questions in there, please, they will come straight through to me. No one else can see them. And I will respond to those questions at the end of the presentation. If you want to ask me something else, you can put it in the chat function. But if we could use the Q&A function, if possible, please, that will make things a little bit easier. For those of you who don't know me, I'm Laura Stanley. I'm the Progress and Pathways Leader, or one of the Progress and Pathways Leaders at Ackland Burley School. But I've worked with students from all across the swap on things like Futures Day, around UCAS, around aspirational groups, around different things to do with post-18. My remit is around things to do with UCAS, careers, apprenticeships, also around year 11s, moving into year 12. We've also got Michael Liu, who's here today as one of the attendees. He is the other Pathways and Progress leader in the sixth form at Ackland Burley. And so Michael might be able to answer any questions you have that are pertinent to him as well, should we need him to. So I don't want to keep you all evening, so we will get going. The slides for this will be available on the Ackland Burley website after the presentation as well. So don't worry about taking notes. So just move my little screen down. First, to just talk you through the basics then of student finance. I am going to talk to you like you don't know anything about student finance. I know a lot of you will have been through the process yourselves or have other children who've gone through the process, but just bear with me for the moment. Student finance, what we call student finance, really, we're talking about Student Finance England, which provide finance to students who live in England and are studying in England. Things are slightly different if you are Scottish or Welsh or Northern Irish. They cover the two main costs that young people have when they're studying. So they cover that via tuition fees, which pay the fees that the university charge to go and study there, and living costs. And the amount that a student can borrow depends on their circumstances, on their course, and on where they choose to study. We'll cover this in a little bit more detail in a little while. One important thing to remember is that any money that comes from SFE, from student finance, is a loan and they have to pay it back. There are other monies they may be entitled to that are grants, bursaries, but nothing from student finance is free. Sadly, it does have to be paid back after graduation, but only after they meet a certain earning threshold. Who is eligible for it? Well, any British citizens who are doing their first degree in the UK, all EU citizens who have settled status under the post-Brexit settled status scheme. And there are some other groups of people as well, such as refugees or anyone who's been granted leave under the Afghan Relocations and Assistance Policy are also entitled to student finance. If your child doesn't come under one of those brackets, so they are not British, they are not an EU citizen with settled status, they're not one of these other groups, then please do speak to either myself or your child's head of year as soon as you can, because it may be that they are not entitled to student finance. I'm always happy to answer questions about that, and my email is at the end of the presentation. Now, the eligibility is based on the student status, not the parents. So it's not your status that matters, it is theirs. So the student themselves must have settled status, for example. Please make sure UK Kickser is a good site, again, to check if you're not sure about things like nationality, about whether that works. And there's also two links here that are really clear and useful advice. Well, This one is very clear and useful advice, the one from the Complete University Guide. The government one is less clear, but also useful, but they are two of the places to check. So the maximum tuition fee that universities and colleges can currently charge new students is £9,250, and that's £9,250 per year. So if a student is doing a 3-year course, most undergraduate courses are 3 years, they will pay 3 lots of that. If the student is doing an extended course, so a course with a integrated foundation year or an integrated master's, so extra year at the beginning or the end, then they will pay that for each year that they are studying at university. But you have to pay absolutely nothing of that, zero upfront before you go. It is covered by the government for the time that the young person is studying and until they earn at a certain earnings threshold afterwards. So nearly every uni does charge the full amount. They can technically charge less if they want to. That's the maximum, but no one does. Pretty much everyone charges the full amount. And every student who comes into those groups that we've just discussed has their full fees covered by the tuition fee loan. You should not be asked for money by a university to pay any tuition fees if your young person is eligible for a fee loan. The loan is there to cover those fees. Now, interestingly, students never actually see this money. It goes straight from the government to the university. So it never hits the student's bank account. They don't have to pay it. When you apply for student finance acts as the go-between, and they just send the money straight to the uni. So that is good. Your young people don't have to mess around sorting out paying their tuition fees. As we already said, they don't have to pay tuition fees up front. Now, if you don't want to borrow the whole amount, they don't have to. I would recommend that they do for reasons that I will talk about later, but you can borrow up to that £9,250. If you want to supplement that, then that is, or someone else in the family can, then that is completely acceptable. And this fee loan does not depend on household income. Every student who goes to uni gets their full fees covered. It doesn't matter what their household income is. It has no relation to that at all. Now, the loan is repayable, as I've said, but it's only when the student is earning over £27,295 a year. And then they pay back a percentage, 9% of everything they earn over that amount. I'll show you some calculations later. For most young people, they pay back a very tiny amount of their loan per month and per year. Now, the other loan, so that's the fees loan. That's the straightforward one. That's the easy one. The slightly more complicated one is the maintenance loan. And this is available to help with student living costs, basically. So this is how they pay their rent, how they pay for books, how they pay for their tube or train or whatever. And every single eligible student gets some maintenance support. But the amount of maintenance loan that you can get depends on a few different factors. Now, one of the other key difference with a maintenance loan is that it's paid directly to the student. It doesn't go to the uni. Your student loans company, sorry, it used to be called Student Loans Company, Student Finance England, don't pay your rent for you. It's paid to the young person and they have to manage that money each term. Again, this loan is repayable, but only when they've left and only when their income hits £27,295 a year. So, how much loan can they get? If they choose to live at home with parents, then the student can get means tested up to just over £8,000 a year. If they live away from home, so whether they live in university accommodation or private accommodation away from home, anywhere outside of the Greater London area, they can get up to £9,700. Again, this is per year. And if they live away from home, but they live in London, they can get quite a bit more. And that is, of course, that is generally to reflect the fact that rent is so much higher in London than it is in most other places in the UK. That is what is going to swallow up the majority of your loan there. Now, if you go to gov.uk/student finance calculator, you can put in a few basic details and you can get an estimate of how much loan your child is likely to get. They will ask you for some details about your income and about your living situation. This is just a breakdown, a more detailed breakdown of the maintenance loan figures. So as you can see, it is done by household income. So up to a household income of up to £25,000, you get the full amount. This doesn't include the London one, unfortunately, but just to illustrate the difference. And then the more income comes into the household, up to 63 grand a year, the less loan the young person gets. Now, any household that has an income of £63,000 a year or more is automatically above the threshold. If you choose to not be means tested, so if you don't want to submit your financial information to Student Finance England, then your young person will get the standard basic amount, which is £4.5 grand a year. You can choose that option to just not be means tested and just get that minimum amount. There are some monies available for free. Not loads, but some. Most universities offer a range of scholarships, and these are most commonly accessible by students who have disabilities or who have challenging financial circumstances, so very, very low income households, or students who are members of underrepresented groups in higher education, so certain ethnic groups, students from certain backgrounds will be eligible for bursaries. And these don't have to be paid back. If it's something that's called a scholarship or a bursary or a grant, that money is yours. You don't have to give it back. But these monies come directly from the university to the student. They're nothing to do with student loans. They're nothing to do with UCAS. So students need to check with their unis that they have applied for to see if they are available and to see if they are eligible. And it will vary uni by uni. Some unis offer loads of them, some offer barely any. It is a little bit of the luck of the draw. And they will usually need to complete some kind of application that often has some kind of personal statement or application statement about why they are applying for the scholarship or bursary. This website, the scholarship.hub.co.uk and .org.uk, is a good place to start. You can put in various unis and various sort of search criteria then, and it will throw up different scholarships that are available for you. So that I would recommend checking that regardless, just to see, because if you can get this money, it's free. So definitely worth applying for. Just to give you an example of types of scholarships that are available, this is only one university. This is the University of Westminster. These are the scholarships that they offer. As you can see, they vary in amount from £1,500 an academic year up to £10,000 per academic year. This one, full fees covered and £6,000 per academic year. But as you can see, there are very specific criteria for some of these loans. So you do need to check very, very carefully and make sure that they apply. So how to apply? If you go to gov.uk/student finance register, then first of all, the student needs to register. Before you can do anything to support their loan, your young person has to log in and create their account first. So once they've done that, they will get this notification. That means that they're successfully registered. This week, we are going to be sending out in PD and directly to students this week, we're going to be sending out a step-by-step guide as to exactly how to fill in the student finance application. And it's about three and a half pages, Word document pages. So it looks quite long, but it really does go through bullet point by bullet point. Do this. Now do this, now do this, now do this. So the students will have everything in front of them that they need to be able to apply for student finance. Once they are in, then they will have an account that looks like this, and it will have two sections. The one where they do their application, and there is also the section that you need to fill in, which is the support section. So once they have completed their registration, a student finance registration, you should get an email that says, child A has applied for student finance. Please log on and provide supporting material. Now, you'll only get that email if your child has put in your email address and they have put it in correctly. So sometimes every year we have people who don't get that email for whatever reason. It's usually because they didn't know your email or they've mistyped it. If you don't get that email from Student Finance, though, you don't have to worry. You can still create your own account. You do need your child's reference number. So this customer reference number here, please get that from your child as soon as they've created their profile, so you can start to submit it. And then even if you don't get the email from Student Finance, you can just create your own account and then click on this section and support their application. Now, if you want a means tested loan, you will need to provide information about your marital status and about your income for the previous tax year, both your household income and your personal income. And they might ask you for supporting documents. You can either upload these into the online portal, or you can post them if you prefer to post them. Similarly, if you don't have an email address, then your child can print off a form for you to hand fill in. But if I'm completely honest, it's so much easier if they can give an email address for you. That is much preferred. Sorry, excuse me. So yeah, again, there are different places that you can either, as I say, create your own account or just follow the link in the email. Now, if you choose to support the application, if you want to be means tested, then HMRC will check the information that you provided. They check basically that what you've said about your income, what you've said about whether you're married or not, whether you live on your own or not, matches up with the information that they have about you. And that normally takes a couple of weeks. If you are asked to send extra evidence, it can take about another 6 weeks after that. So that is why we recommend that the students meet the deadline, the May deadline for student finance, because if it can take 2 weeks and then 6 weeks and it ends up and they're always busy, then that makes sure that they will get their money before term starts. Any evidence they ask for will be from the previous financial year, so 2020 to 2021, so you don't have to wait for P60s or anything to come through this April. And once Student Finance have got all your information, they will keep you updated. So they will write to your child and say, we've received your supporting information, we are now reviewing it, and then they'll let them know when they have reviewed it. So your child has applied, they've registered, they've filled in all their information, they've put in your email address correctly, you've got your email, you've clicked on it, you've gone through Student Finance, you've told them everything that they've asked for about you. Your child has gone off to uni, they do amazingly, they get there first. What then happens? Well, everything that they've borrowed, so their whole tuition fee loan, their whole maintenance loan, is now brought together to make one lump sum. So 3 years of tuition loan, usually 3 years of maintenance loan, is lumped all together and added up into one chunk. And that is what they start to pay back. Now, as I've said, the repayments are based on how much you are earning. They are not based on how much you've borrowed. The overall amount that you borrow does not affect how much you pay back each month. You will pay the same back each month, as I said, whether you borrow £1,000 or £1 million. What it affects is the amount of time that they pay it back for. So the students will only make these repayments when they're in work. If at any point they dip below that earning threshold, so say they're earning 28 grand, they're paying a bit back each month. If they then get a new job and that job is lower, or they lose their job for whatever reason, those repayments will pause until they go back over the threshold. You are never paying back when you earn less than the threshold. This loan also does not affect any future credit scores, so it is not used to determine if they can get credit for anything else in future. Excuse me. Repayments. So the repayment threshold, £27,295 a year. Keep coming back to that. It's important to remember. If they study a full-time course, then they will start repaying in the April after graduating or leaving. So if they graduate in July, even if they go straight into a job earning 50 grand because they're amazing, then they still won't start paying anything until the April afterwards. You get the kind of 9 months or whatever grace period where you don't have to pay anything back. And as soon as you hit that April, and as soon as you hit your £27,295, then you repay 9% of the income, of any income over 27,295. So if they earn 28,295, they pay back 9% of £1,000. So it's anything that's over that. Deductions are made automatically from their pay via HMRC. Again, they don't have to set anything up or do anything. It will just be taken out in the same way that their PAYE is or their national insurance is from their pay packets. And if they are still paying 30 years after they graduate, then any outstanding loan amount at that point is written off and they don't have to pay it back. So it does time out. Here is the just a little estimate of the kind of the amount that you'll be paying back when you leave. So as I say, if you earn the threshold, don't pay anything. If you earn just under 30 grand here, good graduate wage, you'll be paying back £3 a month. If you earn 33,000 pounds, and you can see it does jump up quite a bit at this point, but you're still on a 33 grand wage, paying back just £37 a month from your student loan. So although it seems like a big, massive debt, and I'm not playing down how intimidating this kind of debt can be, but actually the amount that you pay back monthly is really quite small unless you are earning a lot of money, at which point you can hopefully afford it. Don't be scared of borrowing as much as is needed. So, for example, student one borrows 20 grand. They borrow very, very little over 3 years, just £20,000. They're doing amazingly. They earn £37,295 a year, 10 grand over the repayment threshold. So they repay 9% of everything above the payment threshold. They repay back £900 a year. Student two borrows 50 grand. They still only pay back the same amount because they're earning the same amount over the threshold. Student three really went for it. They borrowed £1 billion, but as long as the money that they pay back is still only on the difference between what they earn and £27,295 a year. It doesn't matter what their whole overall debt is. Obviously, this student and this student will be paying that back for longer. This student is definitely going to get their debt written off at 30 years. They're not going to pay £1 billion back. But they're going to be paying it back for longer. This student will pay it off much quicker. But for most young people, I think the fear is, how much am I going to actually pay per month? What is this going to take out of my pay packet every month? And the answer is not a lot. It is really quite a small amount. Now, interest, unfortunately, is charged on loans. And I know that's something that at the moment is quite a worrying thing. And interest is accrued on the loan from when it's taken out. It's not accrued from the end of study, it's accrued from when it's taken. So the student will start paying interest on their first chunk of student loan from the September of 2022. And the amount charged is based on RPI plus 3%. And that's updated once a year in September, and it uses the RPI from March. So obviously at the moment, that the interest rate will be higher than it's been in previous years. But as that falls next year, then obviously the amount of interest charged will come down. There is nothing that you or your young person can really do about that, unfortunately. It is just an unfortunate sort of thing with the economy at the moment. Just a note then on managing money. So it's really worth having a conversation with your children about what the maintenance loan is for. because it will seem like to a lot of young people, they will just get this like massive amount of money in their bank account, like 2, 3, sometimes 4 grand will just land in their bank account at the start of September, and that is really exciting. Well, you've never seen 2, 3, or 4,000 pounds before, but it has to pay for a lot of stuff. We have been doing some sessions in personal development with Year 13 about financial management, and it is something that's really worth, as I say, speaking to them about at home, because that has to pay for everything. It has to pay for your accommodation. That's going to be the single biggest expense that young people have. It has to pay for all their study materials, not just books, but they'll find that the library photocopying costs will really rack up. It has to pay for their travel. They won't get free bus travel anymore. In London, they will have to pay for, or cut price tube, they will have to pay for all their public transport. If they study outside of London, they will have to pay to come home. Trains can be quite expensive. Obviously, it has to pay for their food and drink, phone and internet, social activities, things like contents insurance they will have never had to think about before because they will have used yours. Insurance for their phone might be separate. TV license or any subscription services that they have. These will all have to be budgeted for and paid for out of the maintenance loan. So suddenly that big chunk of money isn't quite so big anymore once you take all the fixed expenses out. Now, as I've said, it is paid directly to them. They have to set up their own standing orders, direct debits, sort out their rent with their uni. And they, as I said, they get their loan, their maintenance loan termly. But even if they spend all their money, they can't get next term's loan early. So if they blow their entire loan by November of autumn term, they can't get their January money until January. They are stuck. Now, universities do have hardship funds. They are for people who are suffering genuine hardship, generally not for people who've spent all their money on going out or whatever. But those funds tend to be loans as well. They have to be paid back, and they do have conditions, like you can't always just apply for one because you want it. So they should never ever be relied on. And another thing to bear in mind is that student bank accounts will often try and lure young people in by having really large overdraft facilities, but changes to overdrafts in recent years mean that these are now rarely free, and they can end up actually being quite expensive to run a large overdraft. So again, it's worth talking to young people about not relying on overdraft facilities in the way that, quite admittedly, I did when I was at university. So please do speak to them in advance about these things. So something that we generally don't want to think about, but I just wanted to add in a couple of slides this year on what if they drop out, because it's a question that I get asked quite often. Excuse me. And if you drop out, basically you have to pay back everything that you borrowed. So to give an idea of how that adds up, the first 2 installments of your fees loan are paid from the student loans company, so it's from student finance to the university in term 1, 2, and 3, and so the uni gets 25% in term 1, 25% in term 2, and the rest of it in term 3, and you're always charged for a full term. So if a student starts university in September and they drop out in November, they will owe £2,300. If they drop out in December, they'll owe £2,300. If they drop out in January, they'll owe £4,650. If they drop out in May, they'll owe £9,250. So although we don't want to think about dropping out, it is just to be aware that the minute you start that course, you owe money. So it is something to bear in mind. The maintenance loan is the same. It's paid to the student in 3 equal installments. So if you borrow 9 grand, you get 333, and you pay back as much as you borrowed, just as expected. Grants don't need to be paid back generally. And another thing to check is if you're bound by a contract on your accommodation. This can bite people sometimes. You might find that especially if it's private accommodation. University accommodation is a bit more forgiving. It's usually term by term, but private accommodation, private landlords can be difficult about this. You might find that your young person is in a year's contract, so do you just be aware of these things, I think. If they do decide to drop out, then can they go back and do another degree? Well, yes, they can. I mean, you're only entitled to full funding for your first degree. So even if you don't make it to graduation, then once you've been funded once, you're not entitled to any more funding. You can go back to uni and do another degree, but you might not get as much money because you've already had the money once. But if you do have compelling personal circumstances, so illness, bereavement, something similar, then you can get more funding later down the line. And everyone is entitled to a year of bonus funding. So for example, so I had this. So for example, if your young person is ill and has to take and has to sort of take a year out, so they get poorly in their third year, and they're in hospital for a while, and so they miss too much teaching, they can't finish their third year, you're entitled to an extra year of bonus funding, to go back in a fourth year and finish off. So there is a little bit of leeway around that. As I say, I hope that this won't be an issue for anyone, but we do have young people each year who start a degree, realize they don't like it, they've chosen the wrong thing, they don't like the uni, and they want to start again. And it's just to give you a sense of what the options are around that. So a few tips for you then before we finish off. The first one is to largely ignore the media. They love writing scare stories about student finance. They love writing big, terrifying headlines about how students are going to be trapped in debt, debt forever, and they're going to have to work in the mines below the university to pay their money back. And actually, although it feels like a big debt, it is a big debt. I'm not denying it is a big debt. Actually, the impact on the young person on a day-to-day basis is quite small until you're earning massive amounts of cash. Look for expert impartial advice. Martin Lewis, money saving expert, is actually really good for this. And although his website isn't very user friendly, there's lots of really good information on there. Do check what your child is eligible for. Make sure that your child shares their details with the universities. If your child has a registered disability, for example, share that information with the university. The uni might come back to them and ask them to apply for a scholarship. I have known that happen. The more information they tell the uni, the more support the uni can give them, be it financial or maybe a laptop or some software or something else. Student support services are really good and really are there to help. Make sure you check for scholarships and bursaries. And my final tip is to apply for and accept as much money as you can in the first place. So even if you apply for your child applies for their maintenance loan, they're entitled to £12,000. They get the full amount. They're living in London. They're living on their own in London. If they find at the end of their first year that they've got £6,000 left, because maybe they've got an amazing job, or they've done really well, or they're just really frugal at whatever, then they can just hold on. They can pay that money back early. But it's better to have the money and pay it back early than it is to be caught short. It's much, much easier to pay it back early than it is to try and get some more money from somewhere. So that would be my recommendation. And certainly with the fees loan as well, there's not much benefit to paying your fees up front. You almost may as well take the loan. They will pay interest. It's a fairly small amount. It is the best value loan that they're ever going to get. So my advice is to take it. If you have any specific questions, so either questions that specifically relate to your child or to your circumstances, or you start doing your application and you get stuck, or student finance asks you for something and you don't know what it is, please feel free to drop me an email. I work Monday to Thursday. And I'm always more than happy to respond via email or to set up Zooms or whatever to talk you through things if you do need any help. I do appreciate that student finance can be a little bit opaque, and it's not always easy to navigate your way around. So I am here to help you should you need anything. And I've just popped some useful links at the end of this presentation as well. The Scholarship Hub, which is already there, the Student Room, And particularly this website, Save the Student, is really, really good for very clear, straightforward advice on a huge range of different things to do with uni and to do with higher education. Lovely. So I'm just going to, just give me a sec. I'm just going to have a check in the Q&A and see what questions we've got. Please do feel free to add any questions while I'm checking if you wish. Lovely. So just a couple of just the easy questions to start with. Do your children have the links? We had a presentation from on Monday from Westminster University where they were given all the information, but we will be sharing more information with them via personal development on Monday next week, including the guide to how to apply for student finance, and that has all the links on. The links will also be in the family bulletin. And they are, of course, in this website. The slides for this website are going to be on the Acklam Burley website. So the Acklam Burley, the sixth form page, the slides will be on there. If you are not if your student is not a Burley student, or if you just like me to send you the slides directly, then just drop me an email and I'll just pop them over to you. The deadline for the finance and maintenance loans is the 20th of May. So you have got quite a long time to reply. Now, one of the things that your child has to put in is they have to put in which university they're going to and which course they've chosen. Now, one annoying thing about the student finance deadline is it's before the university reply deadline. So this is the 20th of May. The university reply deadline is not till the 9th of June. So sometimes there are some students by that point who haven't quite decided where they're going to go. My advice is just bung down anything because they can go back in later on and change it. The important thing is that if you need to be, the reason to do it on time is if you need to be means tested, it's so the student finance can request that information and so they can get it from you in advance. Actually, once they've checked you, then it doesn't matter which uni they're going to, whether it's in London or out of London or living at home or not at home, they'll just adjust the amount of money that they're going to give them. So the best thing is to apply early. As I say, if they're not sure which uni they're going to accept, put down the one they think they're going to accept, and then we can change it later. One question here about household income. If your household income is over £63,000 a year, then you're just going to get the basic amount anyway. So actually, there's not really any point there's no point in being means tested. In my opinion, you can be anyway if you wish to, but you're not going to get more than the basic amount at that point. So it's up to you. If your child did not have the Westminster presentation, that's because because they weren't a Burley-based student. Sorry, I was talking about Burley-based students there. So in that case, they might not have the information from Parley yet, but if you drop me an email, I'll send you this presentation, and I'll also send out my the step-by-step guide that we use at Burley as well. I'm happy to send that to anybody who's at any swap school. The last question, sorry, there is a question about status, about residential status. If your child was born in the UK and registered as a British citizen, then they are British, and it doesn't matter what their parents' nationality is. It's what they are registered as. So that is the thing to check. Or if they have a dual nationality, British and another nationality, that's also fine. If they can get a British passport, they can get a student loan. I think that is the sort of one of the key things to look at. If you'd like me to look into that in more detail, again, please drop me an email and I will double check it for you, but I wouldn't be able to do that right now. Just say thank you to Michael, who's just answered a question in the chat as well. Just popped the link to the Ackland Burley website in there. The slides aren't up there yet, but they will be next week. I have a hand up. I'm just going to allow you to speak if you'd like to ask your question, please. Hi there. Do you have a question?
Hi, sorry, I think I made a mistake there.
Oh,
I
it's
just put
okay,
a question in it. Sorry about that.
No worries. If anybody would rather just say their question, there is a little raise hand button at the bottom of the screen there if you want to just ask, or like I say, feel free to keep using the chat. The question and answer, sorry, I'm just putting my email address in the chat now. So as I say, if you would like me to send you this presentation directly or any of the guides I've also got, actually, it's going in the bulletin next week, in the Ackland Burley bulletin next week, sorry. There's a very brief parent guide to student finance. It's just sort of 2 sides of A4, but it covers a lot less than we've covered in this webinar today. So anything that you get from that will be won't be as detailed as this, but I can also send that out to you as well. It's got the links on. It's quite a nice crib sheet, and as I say, any of the guides I've done for students as well. So a question, if you have a higher house, so if the household income is, for example, £70,000, this is the question, but only the mother is responsible for the child and their income is lower, how does that work? It works on your household income. If you are cohabiting with someone or married to someone, even if they are not the parent of that child, then their income is taken into account. It is a household income that is assessed. So that is something to bear in mind. Who at Parley can give advice on this? So I would speak to your child's head of year. They will be the best person to get to point you in the right direction. They will be able to tell you the person at Parley who does the most similar. They don't have someone in the exact role that I have, but they will have someone who is in a similar role at Parliament Hill. Or as I say, you can always come to me and ask if you like. I think that's it. We are just about done with questions. If anybody has another question, if you want to just ask quickly now, either put your hand up and ask or pop it in the Q&A. Otherwise, we will wrap up for the evening. Lovely. Thanks very much, everyone. Thanks for everyone who attended. Really good to see everyone and to speak to you. I hope you have a really good evening. Like I said, please feel free to get in touch if you would like anything. Good night.